Hello students, in previous lecture I completed share capital and debentures chapter. In this lecture I will start acceptance of deposits by companies chapter. Now total 4 to 5 sections we need to discuss in this particular chapter. And very scoring chapter from this chapter you can expect 6 marks. If you take share capital and debentures chapter, total 30 sections you need to study. Section 43 to section 72. And it will give you some 6 to 8 marks. But coming to acceptance of deposits chapter, only 5 sections 73, 74, 75, 76 and 76A. If you remember all these 5 sections, you can definitely score 6 marks in your examination. So don't neglect this chapter. Understood? Tricky chapter but scoring chapter. So follow me carefully, pay your attention. Okay, before I start new chapter in this lecture, let's revise section numbers of share capital and debentures chapter. So chapter number 4, share capital and debentures. Share capital and debentures 43 to 72. So two parts. Part 1, provisions related to share capital 43 to 70. For remembering section numbers, I am telling this story ma. Are you all getting my point? Next one, debentures 71. And every holder of a security, whether it is a share, equity share, preference share or a debenture, he is having a power to nominate any person who can become holder of securities in the event of death of this member. Understood? So that is what power to nominate, nomination, simply you can call it as nomination clause 72. Nomination clause is mandatory in case of one person company, but it is optional in case of other companies. Understood? Now next one, share capital. Basics. Yeah. First of all, kinds of shares, equity preference. Next one, nature of share or debenture. And next one, numbering of shares. These three you can find in certificate of shares. Yes, whether it is equity share or preference share. And what is the numbering of the share? You can observe in certificate. By holding this certificate, yes, a holder of this certificate will get voting rights. And any variation in the rights, that's we call it as variation. Change in rights, variation. Next one, if any member is holding partly paid up shares, then company is having a right to make calls on shares. Yes or no? Calls on shares. Person paying any amount in excess of call, we call it as calls in advance. Subject to AOA, company can accept calls in advance. Yes or no? With respect to calls in advance, do you think company will give extra voting rights? Do you think company will give extra dividends? No. Calls in advance is a debt to the company. Company will pay interest on calls in advance, no dividend. So that's what dividend. So up to here, mark section numbers ma. Come on, mark section numbers. Kinds of shares 43, nature of shares 44, numbering 45, certificate 46, voting rights 47, variation of rights 48, calls on shares 49, calls in advance 50, dividend pro rata basis 51. Clear? Yes sir. Next one, issue of share capital. Under issue you can observe 3 branches. Issue of shares at a premium, issue of shares at a discount. Next, issue and redemption of preference shares. Sir, issue of shares at a discount is void. However, to this general rule we had one exception. That exception is sweaty equity shares. Now section numbers. Application of securities premium 52. Issue of shares at a discount void 53. Sweaty equity shares 54. Issue and redemption of preference shares 55. Next branch, transfer of shares. First, we discussed basics. Next, issue of shares. Later, transfer of securities. Are you getting my point? In this manner you need to remember, then only you feel comfortable in remembering section numbers. Yes, under transfer, yes, we discussed four concepts ma. First one, come on, tell me. Transfer or transmission. Next one, personation of shareholder. Personation, punishment for personation. Punishment for what? Punishment for personation of shareholders. Okay. Next one, with respect to transfer, if company is making a, if company is not registering the transfer, company refuses to register the transfer of securities or transmission of securities, then what are the remedies available to the aggrieved party? That's what, next topic, next section. Clear? So next section is refusal of registration of transfer. And next one, rectification of registers. Come on, write section numbers ma. Mark section numbers. Transfer transmission 56, personation of shareholder 57, refusal of registration of transfer and appeal against such refusal 58, rectification of registers 59. And coming to the last part, it is alteration of share capital. Last part, alteration of share capital. So yes, total 4 branches: basics, issue, transfer, alteration. Basics, issue, transfer, alteration. So first one, before alteration, whatever authorized share capital you are having, and whatever share paid up share capital you are having, yes, you need to publish on official documents. So wherever you publish authorized share capital, on whatever papers, wherever you are publishing authorized share capital, along with authorized share capital, you need to publish paid up share capital. So that's what, section number 60. Yes, 60. Next one, alteration. Place is not sufficient, that's why, coming down. Alteration of share capital, section 61. Publication of share capital 60, alteration of share capital 61. So once you make alteration, yes, definitely company may issue shares ma. Company can issue shares. So issue of shares for cash, simply further issue of shares. Section 62. Free of cost, sir. Free of cost, nothing but bonus. Yes, bonus. Then section 63. Whenever company makes alteration of share capital, company is required to file form number SH7 with ROC within 30 days of alteration of share capital. That is section number 64. Clear? Everyone. Next one. This is also alteration of capital only. This branch will also comes under alteration of capital only. But this time, this is, it's all about reduction. Reduction is also part of alteration only. For the purpose of remembering section numbers, I'm telling you the story. So no confusion. I'm not changing any concept. For the purpose of remembering section numbers, I'm narrating a story. So alteration includes reduction. Generally, alteration is different, reduction is different. Under alteration of share capital, you can observe, unsubscribed shares, unissued shares, we will cancel. A reduction of capital, company will cancel issued shares, subscribed shares. And already shown you one practical scenario, Paytm e-commerce services private limited. Yes or no? That Singapore based companies, Alibaba company, it is surrendering its shares to the company and company is cancelling those shares. Remember? Okay, fine. See, reduction is of two types ma. Reduction of liability of members of the company. Reduction of liability of members of the company. The original section name is, the name of original section is conversion of unlimited liability, conversion of unlimited company to limited company. Generally, members of unlimited company will have unlimited liability. The moment company gets converted into limited company, members liability will be limited. That means, unlimited liability is getting reduced to limited liability. Yes or no? That means reduction of liability is there. Yes or no? So section 65. So unlimited companies, if it want to convert into limited companies, it need to create a reserve capital. That's what section 65, not there, not relevant. But for remembering section numbers, I'm telling you. Next one, a reduction of capital. A reduction of capital. Under reduction of capital, you can observe two branches. One is reduction of capital. A reduction of capital, it happens in three scenarios, right? It may happen in any one of the three scenarios. So what are those three scenarios? Cancellation of uncalled capital. Next, cancellation of misrepresented capital, and pay off excess money, pay off money in excess of company wants. And after paying that money, cancellation of that part of paid up share capital. Yes or no? So reduction of capital. Next, purchase of shares, purchase of its own shares. So with respect to purchase of its own share, purchase of its own shares, there are some restrictions. That is section 67. And next one, buyback of securities. Buyback of securities. Under buyback, again three branches. One is conditions for making buyback of securities, 68. And when you select divisible profits for the purpose of buyback of shares, when you choose divisible profits for buyback of shares, then amount equivalent to nominal value of shares so bought back shall be transferred to capital redemption reserve account, section 69. And cases where buyback is prohibited, prohibition on buyback, that is 70, section 70. So complete list of share capital and debentures chapter sections ma. Share capital and debentures 43 to 72, share capital 43 to 70, debentures 71, power to nominate 72. Basics with respect to share capital, kinds, nature, numbering 43, 44, 45. All these three you will find in certificate 46. Holding this certificate, member will get voting rights. Any change of rights, variation 46, 47, 48. If he is holding a partly paid up shares, yes, company is having a power to make calls on shares 49. Calls in advance 50, dividend 51. Now coming to issue of share capital, you can issue shares at a premium. Now with respect to premium, how can we utilize that premium? Section 52. Issue of shares at a discount, void 53. Issue of sweat equity shares 54. Next, issue and redemption of preference shares 55. Issue completed. Next, transfer. Transfer or transmission of securities 56. Understood? Transfer, transmission of securities 56. Whenever transfer happens, it is the duty of company to update register of members. To update register of members. Understood? So in this transfer, any member, any person pretending himself as a owner, are you getting my point? Any person pretending himself as a owner, and he is involving in the transfer in order to get some benefit, advantage, that is nothing but personation of shareholder, punishment 57. Company, if it is having valid grounds, then it can refuse a registration of transfer. Invalid grounds, aggrieved party can file or can prefer appeal to tribunal, section 58. If company is making unnecessary delay in updating the registers, or if there is any mistake in the registers, the aggrieved party can appeal to tribunal, rectification of registers, section 59. Next one, publication of authorized share capital, paid up share capital, section 60. Alteration of share capital, 61. Further issue of shares, 62. Issue of bonus share, 63. And filings with ROC, 64. Getting my point, students, everyone. Next, unlimited company to provide for reserve capital on conversion into limited company, 65. Reduction of capital, 66. Restrictions on purchase of its own shares. And in some cases, company is prohibited from financing anyone in order to purchase its shares or its holding company shares. Are you all getting my point, students? 67. Next one, buyback. Buyback. Conditions related to buyback of shares, 68. Capital redemption reserve account, 69. And prohibition on company. In some cases, company is prohibited from making buyback of shares. Section 70. So with this, we completed section numbers of share capital and debentures. Can you remember section numbers? Okay, fine. So moving on to the next topic. What is our next topic, ma? Come on. New chapter. Acceptance of deposits by public. Acceptance of deposits by public. Acceptance of deposits by public? No. Acceptance of deposits by company. Many students or many students, they took this chapter as a wrong interpretation. They will think that this chapter is a public deposits. No, this is not public deposits. This is deposits by the company. Company may accept deposits from its members, and eligible companies can accept deposits from public. Understood? So here deposit holders, that means who can deposit money with companies are members of the company. Few companies, eligible companies may accept deposits from members, may accept deposits from public. So first of all, what is the meaning of word deposit and how it differs from debentures? Are you getting my point? So first we'll discuss these points, ma. Is it clear? So come on, tell me, my dear students, what is the difference between deposit and debenture? Deposit and debenture. First, we look similarities of deposits and debentures, and then we will differentiate deposit and debenture. Both are debt to the company. Deposit is a debt to the company. Debenture is a debt to the company. That means company will have an obligation to return this money to the lenders. Clear? Next, company is required to pay interest on deposits. Company is required to pay interest on debentures too. And this interest amounts, yes, allowable expenditure for the purpose of calculation of taxes. Under income tax act, yes, company is required to pay tax on its profits, right? So from that profits, interest on deposits, interest on debentures, you can reduce allowable expenditures under heading PGBP. Clear? Next one, both deposits holders and debenture holders, they will carry no voting rights. Understood? So company accepting deposits, right? So deposit holders, will he get any voting rights? No voting rights, sir. In case of debenture, no voting rights. Company is prohibited from issuing debentures that carry voting rights. Section 71. Previous lecture we discussed, right? Yes or no? See, these are what, similarities between deposits and debentures. Now coming to the differences, differential factors, for a company to issue debentures, if a company want to offer debentures to the public at large, then company is required to prepare a document called prospectus. Prospectus and allotment of securities rules will apply. If company wants to offer debentures to its existing members, then letter of offer. Company is required to prepare letter of offer, and that letter of offer shall be given to all the members of the company. If company wants to issue debentures to the known investors, known or identified persons, in that case, company is required to prepare a document called private placement offer cum application letter. Section 42 will apply. Are you all getting my point, students? Now coming to the deposits, it is sufficient if a company prepares circular. Only one document, circular. Preparation of circular is sufficient. So this is one difference. Second difference, a person who makes an application for debenture, he will be given debenture certificate. And if you ask me, this nature of this certificate, it is movable in nature. It is transferable from one party to another party subject to AOA. So transfer or transmission of securities provisions will apply to the debenture. But coming to the deposit, person making deposit, company will issue deposit receipt, and generally this is non-tradable receipt, non-tradable. This will not have any marketability feature, no marketability feature. So that means till maturity, you should hold this deposit receipt. At the time of maturity, you will get the money. Understood, everyone? Whereas debentures, if you want money the next day of allotment of securities, you can transfer it to someone else. You can get money easily. Coming to deposit receipt, no, you need to wait for you need to wait till maturity period. Understood? So that's the reason, generally debentures carry a lower interest compared to deposits. That means compared to debentures, deposits will have high rate of interest. Are you all getting my point, students? Everyone, the major difference, one is tradable security, debenture certificate. Deposit receipt, generally non-tradable. You can list debentures in recognized stock exchanges, but you can't list out, you can't list deposit receipts. Everyone. And another difference, debentures, a company can issue for a period maximum 10 years, maximum 10 years. With respect to deposits, a company can accept deposits for a period maximum 36 months. In terms of years, it is 3 years only. So that means, debentures, you can issue debentures for funding long-term projects, long tenure projects. Deposits, medium term, short term. Are you all getting my point, students? The deposit debentures both helps company to raise funds. Whereas debenture, company can continue with the debenture holders for a tenure up to 10 years. Deposit holders, maximum 3 years. Everyone getting my point, students? Everyone. So these are the few differences, and I'll let you know some other differences when I proceed with section 73, 74, 75 and 76. Are you all getting my point, students? Everyone. So these are the small differences. And one major difference, if company decided to offer debentures to the public at a large under prospectus, then it is required to satisfy two more additional conditions. That is section 39 and section 40. Company should satisfy the condition of minimum subscription, minimum application money. Minimum subscription means how much? The amount stated in the prospectus as minimum subscription, and it shall not be lower than 90% of public offer. And minimum application value, you all know. What is the minimum application value? 5% of face value or 25% of the issue price. Next one, company is required to get permission from the stock exchanges with which it filed application. Sir, it filed application with 5 stock exchanges, 1 rejected, 4 accepted. Can company proceed with public offer? No. If company collect any money, then company is required to refund all these monies. Understood? So these rules, rules of minimum subscription, minimum application, these rules will apply with respect to debenture. But coming to the deposits, there is no such concept. There is no such concept at all. Minimum subscription, minimum application money, listing, these conditions will not apply. So with respect to deposits, we had less compliance cost compared to debentures, compared to equity shares. Are you all getting my point, students? So when a company is planning to issue debentures, it is required to comply more provisions compared to deposits. So deposits, it is based upon company goodwill, company reputation. Suppose my company is having a goodwill in the market. My company created trust in the market, and I need funds. Of course, whenever I need funds, I can go to bank. Understood? So I can borrow money from banks, but I need to comply the conditions of the conditions put by the banker. Understood? Suppose I'm having a trust in the market. Many people trusted my company. Now I want to encash the trust. So simply I'll issue a circular. So company is accepting deposits. So looking at this circular, interested candidates, interested people will deposit their money, and company will issue deposit receipt. Are you all getting my point, students? See, compared with equity shares preferentials, less number of conditions in debentures. Compared to debentures, less number of conditions with respect to deposits. Is it clear? Everyone? But fundamental difference, you remember, one is a marketable security, one is non-marketable security. That's it. Both are debt to the company. On both, company is liable to pay interest. On both, company will not give, deposit receipts, or company will not give debenture certificates carrying voting rights. These are the similarities and differences. Next one, General rules for acceptance of deposits. Let me tell you general rules for acceptance of deposits. Once I complete these general rules for acceptance of deposits, then I will enter into the chapter. I'll start first question. Sir, first of all, what are the general rules? What are the rules or what are the conditions company should comply for accepting deposits? For accepting deposits, conditions for acceptance of deposits. Conditions for acceptance of deposits. Can I start? Yeah. First one, first point. Company is required to call for a general meeting. In this general meeting, yes, company is required to get ordinary resolution from members. So approval from members is required for accepting deposits. For accepting deposits, general permission from members is required. Whereas for issue of debentures, I'm asking you, for issue of debentures, members approval required or not required? Come on, answer me, ma. For issue of debentures, members approval required or not required? Sir, if company is offering convertible debentures, then members approval is required, sir. Yes, correct. Sir, if company is issuing non-convertible debentures, whereas existing debt plus proposed debt put together, if the amount exceeds aggregate of company's paid up share capital plus free reserves plus securities premium, in that case also company special resolution is required, sir. Correct. For acceptance of deposits, no need of special resolution. Ordinary resolution is sufficient. Understood. Next one. Preparation of circular. Once company get permission from members, company is required to prepare a document called circular. For public offer, prospectus. For private placement, offer cum application letter. Further issue of shares to the existing members, letter of offer. Understood. Coming to the deposits, preparation of circular is sufficient. And the circular will contain financial position of the company. Circular must contain following matters, financial position of the company. Next one, credit rating. So this is similar to our CIBIL score. Similar, not exact, similar. Suppose if you want to borrow funds, if you want to borrow money from banks, first banks will check your CIBIL score. If your CIBIL score is 700 and above, they will show interest in giving loans to you, or else they will not give loans to you. This CIBIL score is based upon your track record in repaying the loans. If you are good in repaying the loans, you are making loans repayment in a prompt manner, then you will get a high score. Any person having high CIBIL score, yes, easily he can get loans from the banks. Suppose you took loan and you are not paying that amounts, you are not paying installments. Obviously, your credit, your CIBIL score will come down. In future, no bank will show interest in giving loans to you. Are you getting my point? So based on financial position of the company, a repayment track record, some agencies will give credit rating to the companies, and that credit rating, yes, you need to present it in the circular. Circular shall also contain matters relating to the credit rating. And next one, outstanding deposits. Outstanding deposits at the time of making a circular, at the time of issuing circular. So what are the deposits company is having, and who are the deposit holders? That information you need to provide, you need to provide in this circular. Next one, preparation of certificate of no default. Certificate of no default with respect to payment of interest and with respect to repayment of deposit amount. Sir, last 5 years, company committed no default with respect to payment of interest on deposits, with respect to repayment of deposits principal amount. Like that, company is required to prepare a certificate, and that certificate should be certified by company auditor. Understood? So this document company is required to prepare. And next one, next condition, ROC filing. Company is required to file company is required to file a circular with ROC. And next condition, deposit trust deed. So this is an agreement between company and depositor trustee, similar to debenture trust deed ma. In case of debentures also, we studied about debenture trustee and we studied the trust deed condition, yes or no? So here also deposit trust deed, company is required to prepare deposit trust deed, and this deed is an agreement between company and depositor trustee. Next one, issue of circular. Issue of circular. The second point is all about preparation of circular. Fourth point, filing circular with ROC. Sixth point, issue of circular. Yeah, company is accepting deposits. Company is accepting deposits. Issue of circular. Next one, issue of deposit receipts. Issue of deposit receipts. So looking at circular, interested people will deposit their monies with the company, and company is required to create and issue deposit receipt in the name of depositors. Clear? And next one, creation of deposit repayment reserve. Last one, filing ROC filing. ROC filing, it's all about return of deposits. Return of deposits. So these are the general conditions. These are the general conditions. And two more conditions we need to discuss. Two more conditions. That is time limit or tenure for deposits. Tenure. Minimum tenure for accepting deposits is 6 months. Maximum 36 months. A company can accept deposits for a tenure minimum 6 months, not less than 6 months, and maximum, not exceeding 36 months. Suppose, company is accepting deposits on 1st January 2024. Company is accepting deposits on 1st January 2024. Company should retain these deposits, for a period of minimum 6 months. 30th June 2024 until 30th June 2024, company should not repay them. And maximum tenure of the deposits is 3 years. How many years? 3 years. So 31st December 2025, 26, sorry, 24, 25, 26. Yeah. So maximum tenure 24, 25, 26. Yes. Maximum tenure 36 months. So company is prohibited from accepting deposits for a tenure less than 6 months. Less than 6 months, prohibition. Exceeding 36 months, prohibition. Minimum tenure for holding these deposits is 6 months and maximum tenure 36 months. Are you all getting my point, students? Sir, can a company accept deposits for 1 month? No. Can a company accept deposits for 2 months? No. Are you getting my point? Sir, can a company accept deposits for 4 years? No. Can a company accept deposits for a period of 6 years? No. So minimum tenure 6 months, maximum tenure 36 months. Come on, tell me, my dear students, for debentures, minimum tenure condition there or not there? Not there. Maximum tenure condition is 10 years. Of course, companies engaged in infrastructure projects, infrastructure debt fund companies, NBFC companies, infrastructure finance companies, for them 30 years. I remember 30 years. I hope you also remember that condition. Okay, clear? So what is the minimum tenure for accepting deposits? 6 months. Maximum tenure for accepting deposits 36 months. And there is one more condition we need to discuss, that is, limit with respect to amount. Limit on deposits. The limit is existing deposits plus proposed is nothing but new, both put together, they shall not exceed, that means less than or equal to 35% of company paid up share capital plus free reserves plus securities premium. General rule ma, general rule. See, to this general rule we had many exceptions. That exceptions part I'll discuss with you once I start chapter. This is just, a brief introduction, not yet started. Just follow me carefully. So what is the limit on acceptance of deposits? Existing deposits plus proposed deposits. That means company wants to accept deposits right now. So proposed deposits plus already accepted deposits put together, they shall not exceed 35% of paid up share capital plus free reserves plus securities premium. Are you all getting my point? Everyone. Everyone. Next one, classification of companies. Classification of companies. Company, two types ma. Private company, public company. Private company, public company. In public company also we are having two types of public companies. First one, others. Next one, eligible company. Eligible company. The eligible company means what? Public company with net worth 100 crores or more, or turnover 500 crores or more. Public company having net worth 100 crores or more or turnover 500 crores or more, we call it as eligible company. Other than eligible company, other public companies, simply, ineligible public companies. Now private companies. These two companies can accept deposits only from members. From whom they can accept deposits? Members. That means in this case, company is accepting deposits from deposit holders. Companies accepting deposits from deposit holders. Who can be deposit holders, sir? Who can be deposit holders in first two cases? Deposit holders can be members. Only members can act as deposit holders. Now coming to the eligible company, public company having net worth 100 crores or more, or public company having turnover 500 crores or more, it can accept deposits from, both members as well as non-members. Non-members is nothing but, public. Non-members is nothing but public. Are you all getting my point, students? Everyone. So companies, how many types? Two types. Private company. Private company can accept deposits from whom? Members only. Now coming to public companies, eligible public company can accept deposits from members, can accept a deposit from public. Whereas ineligible public companies or all other public companies can accept deposits only from members, can accept deposits only from members. Yes. So that means, in last case, if you observe, yes, company is accepting deposits from deposit holders. These deposit holders may be, either member or non-member. Understood? Actually, these are the conditions I need to discuss with you in the second lecture or third lecture. But I'm discussing right now. I'm discussing now itself. I want to at least give some introduction. Conditions for accepting deposits, limit on acceptance of deposits, tenure for accepting deposits. I want to give conditions before I start chapter. I want to teach you the conditions before I start chapter. Why? I'll tell you. Within 5 to 10 minutes, you will get clarity. Within 5 to 10 minutes, you'll get clarity. So, come on. Tell me, what are the conditions for acceptance of deposits? First, approval from members is required. Next, preparation of circular. Next, preparation of certificate of no default. Next one, ROC filing circular with ROC. Next, preparation of deposit trust deed. Next, issue of circular. Next, acceptance of deposits. Against accepted deposits, company is required to create and issue deposit receipts. Next, creation of DRR. Sima, I'm not telling in detail. Generally, there is a time limit for issue of deposit receipts, and there is a limit on deposit repayment reserve. Understood? And there is a time limit for filings with ROC. I'm not telling you in detail. I'm just giving an overview. Why? You will get to know after 5 to 10 minutes. So pay attention. Yes, issue of deposit receipts. Next, creation of DRR. Next, ROC filing. So a company can accept deposits for a tenure not less than 6 months. At the same time, not exceeding 36 months. So 18 months deposits, 24 months deposits, 9 months deposits, 27 months deposits permissible. Next, coming to the limit on deposits. A company can accept deposits up to 35% of paid up share capital plus free reserves plus securities premium. So while checking this limit, you need to consider outstanding deposits also. Next, here companies are of two types: private company, public company. All companies can accept deposits from members, whereas eligible companies can accept deposits from members as well as non-members. Clear? Is it clear? Okay, fine. Now let's start chapter, ma. Let's start the chapter. Explain the meaning of term deposit under Companies Act 2013. Introduction, very simple introduction. Ma, just give one time reading. See, ma, for company in order to carry business operations, it can raise funds through various sources. It can raise funds through various sources. For example, fundraising. First one, issue of securities. So coming to the securities, yes, company can issue equity shares, company can issue preference shares, company can issue debentures. So by issuing these securities, company can raise funds. Understood? And the next source is, borrowings from banks. Loans from bank, NBFC, non-banking financial companies. Next one, public financial institutions like LIC, industrial development banks, next LIC, like that. Public financial institutions, Unit Trust of India, IFCI, like that. Company can raise borrowings. Company can raise funds through borrowings. Company can raise funds through borrowings. And one more source of raising funds is, deposits. So provisions related to the deposits, chapter 5 will govern. Chapter 5 governs the provisions related to the acceptance of deposits by the companies. So that's what, introduction part. Now coming to the question number 1, definition. The term deposit, definition, see, deposit includes, oh my god, similar definition we studied in debentures concept. Debenture includes debenture stock, bonds, remember, instrument evidencing a debt to the company. So 3 items covered under the definition of debentures, right? Now here deposit includes any receipt of money by way of deposit or loan or in any other form by a company, but does not include such categories of amount as may be prescribed in consultation with the Reserve Bank of India. So simply if you look at the definition of deposits, come on, tell me. Definition for deposit. Deposit includes any receipt of money. Any receipt of money. That receipt may be in the form of, deposit. Next one, loan. Next one, other form. But excludes categories, excludes amounts prescribed. So prescribed amounts have been excluded from the definition of deposits. So with this it is very clear. So the items which were excluded from the definition of deposits, above conditions you are not required to satisfy. Above conditions, whatever we discussed, ordinary resolution, preparation of circular, filing of circular, issue of circular, creation of debenture trust deed, creation and issue of deposit receipts. Debenture trust deed I told, right? No, deposit trust deed, I'm sorry, deposit trust deed. Next one, creation of DRR, creation of and issue of deposit receipts. All these conditions are applicable with respect to only this category, and above conditions are not applicable to this category. So definition is very simple. Deposit includes, first of all, it is inclusive definition. So this definition will not define the word. In fact, it will give you list of items covered under the definition. Any receipt of money in the form of deposit or loan or any other form, we call it as deposit, and it excludes categories prescribed by the central government in consultation with Reserve Bank of India. Now I got a doubt. Sir, suppose sale receipt is there, sir. Sale receipt. I sold goods to the customer. After 1 month, he came to me and he paid money. For me, it is a receipt of money, sir. That receipt of money, is it also treated as deposit? Is it termed as a deposit? No. But here there is a word called other form, no, sir. See, when there is a statement, in a statement, if you find a combination of specific words and general words, in any statement, if you find combination of specific words and general words always derive its color from specific words. Eugisdem generis. First time I told Eugisdem generis in doctrine of ultravirus. Eugisdem generis, I discussed with you in the concept of doctrine of ultravirus. So here other form means That other form is also indicating a loan to the company only. Now, sale receipts from the customer, sale receipts from the debtors is not termed as deposit. So, loan of the company, a deposit of the company is treated as deposit. Sir, in that case, debenture, borrowings from banks, receipt of money by issuing securities, all these amounts will also comes under the definition of deposit? No. Sir, why no? First you need to discuss, sir, first we need to discuss this excluded category. Then you will get clarity. Then you will get clarity. See, the word deposit is defined in negative manner. The word deposit is defined in negative manner. General definition is just one line. Receipt of money by way of deposit or loan or any other form is a deposit, but does not include such categories of amount. If you look at excluded categories, just look at question number 2. Just look at question number 2. It starts in 182 page. 2, 3, 4, 5. Almost 5.5 pages question is there. 5.5 pages. So total 18 amounts were mentioned, ma. Total 18 amounts were excluded from the definition of deposits. 18 categories of amounts are excluded from the definition of deposits. Now we need to discuss all these 18 categories. Very important. Very important. If you understand these 18 points, 75% of the chapter will complete. 75% of chapter will complete. No, just to take last 3 to 4 attempt question papers. You'll find, a question from deposits from exempted categories only. So they will ask you whether is it a deposit or not. Whether it is a deposit or not. So they will give a situation, they will narrate a story, and they will ask you, is it a deposit or not? Are you getting my point, students? So now you need to concentrate on these 18 points. All 18 points. Very easy to remember. Very, very easy to remember. Just follow me carefully. So prescribed categories are not considered as deposits under Rule 2, Subrule 1, Clause C of Company Acceptance of Deposit Rules 2014. Explain. So what are they? What are they? So first one, my discussion is all about, come on, tell me, amounts not considered as deposits. Amounts not considered as deposits. The notes part for this chapter is very, very important, ma. I'm giving notes to each and every point. So just copy it. Just copy it. Simply listening is not sufficient for this chapter. Beginning only I told you. Tricky chapter, ma. Tricky chapter. But scoring chapter. So first one. Amounts received from government. Amounts received from government. So here, amounts received from government means central government, state government, or sources guaranteed by either central government or state government or from any local authority or statutory authority. Like if you take IEPF, yeah, it comes under statutory authority. Now, loans, deposits received from the governments. Government here includes central government, state government, or any source guaranteed by central government or state government, or amounts received from local authority, amounts received from statutory authority. These amounts are not considered as deposits, even though they look like a deposit under the definition. First of all, what is the definition, ma? First of all, what is the definition? Any receipt of money in the form of loan, deposit, or any other form, it is treated as deposit. Now, loans are taken from government. Loans obtained from government, central government, state government, or sources guaranteed by central government, state government, or local authority, statutory authority. These amounts are treated as just loans. These amounts will not come under the definition of deposit. By this, it is very clear. So while checking the limit of deposits, I told you 35% of paid up share capital plus free reserves plus securities premium. In this limit, these amounts will not fall. And for getting these amounts, company is not required to pass ordinary resolution. Company is not required to prepare circular. Company is not required to file circular with ROC. Company is not required to issue circular to the members. Company is not required to create a deposit trust deed. Company is not required to create a deposit receipts. Now, are you all getting my point, students? Everyone, are you getting my points? So why I told these conditions at the beginning of the chapter? Why I told these conditions? To understand in a detailed manner. To understand. Is it clear? So first 2 point we completed. Out of 18, first points I completed. Second point, received from foreign. So here, foreign governments, foreign governments. Next, foreign banks, Bank of London, for example, Bank of London, Middle East. Next one, foreign financial institutions, multilateral financial institutions. Next one, from foreigners, etc. So simply, so amount received from foreign countries, from foreign government, foreign banks, multilateral financial institutions, foreigners. So they are not treated as deposits. General rule, they are not treated as deposits. So this is second exempted category. Now coming to the third exempted category. Loans from banks, public financial institutions, PFI, NBFC. Sir, what is the difference between bank and NBFC? The major difference, banks can accept deposits from public. Banks will give loans to the public. NBFC, it will give only loans to the public. It can't accept deposits from public, ma. Suppose, State Bank of India, you can open account. You can save your money in a State Bank of India. Understood? You can make fixed deposit with State Bank of India. You can make recurring deposit with State Bank of India. But these facilities are not possible with NBFC, like Muthoot Finance if you take, Punjab National Bank Housing Finance you take. Are you getting my point? So with these companies, you can get loans only. You can't save your money with these companies. So NBFC, always it will give. Whereas banks, it will give loans and it will take money from public. Understood? That is the fundamental difference between banks and NBFC. Everyone getting my point, students? Everyone. So loans are taken from, banking companies, cooperative banks, public financial institutions, NBFC. So these are also excluded from the definition of deposits. Here only 1 point, extra point I told you, that is loans from public financial institutions. Fourth exception or fourth exemption. Next one. Fifth one, issue of securities. Amount received through issue of securities. Amount raised through issue of securities. Like, commercial papers. Actually, commercial papers is excluded from the definition of debenture. Issue of commercial papers is excluded from the definition of debenture. Now viewers will get a doubt whether is it a deposit or not a deposit. The answer is it is not a deposit. Or other instruments as specified by RBI. Others are specified by RBI. So if you raise money through issue of these securities, then also they will not come under the definition of deposits. Once not coming under the definition of deposits, that means you need not required to satisfy general conditions, not required to satisfy tenure conditions, not required to satisfy a amount limits. Are you all getting my point, students? Next one. Amounts received from other companies. Amount received from holding company, subsidiary company, other companies. So simply we call it as intercorporate borrowings, intercorporate loans. Reliance Industry Limited giving loan to TCS giving loan to Adani Enterprises. So all this comes under intercorporate loans. For this, section 186 is applicable, which is not there in our syllabus. Section 186 is applicable, ma. So this amount will also not come under the definition of deposit. Are you all getting my point? Next one. Share application money or securities application money. My dear students, for this point, you need to remember section 42 time limits, ma. Section 42 time limits. Do you remember one point? From the date of receipt of application money, from the date of receipt of application money, company is required to make a allotment of securities. Receipt of application money, come on, tell me, from the date of receipt of application money, within 60 days, allotment must be completed. Company must allot securities against that receipt of money, or else within 15 days, company is required to refund all those monies. I told this point, yes or no? Yes. If company fails to refund that money within 15 days after expiry of 60 days, then company is required to pay interest from 61st day onwards. Company is required to pay interest from 61st day onwards. I told this point in section 42. I'm challenging you. If anyone proves that, sir, you didn't discuss this point in section 42, I'll pay you 1000 rupees. I'll pay you 1000 rupees. Offer period unlimited. Offer period unlimited. Understood? Under section 42, I discussed this provision with you. So from the date of receipt of application money, company is required to make allotment within 60 days. If company fails to make allotment, then within 15 days from the expiry of 60 days, company should refund all those monies. Or else company is required to pay interest at the rate of 12% per annum from 61st day onwards. And here the point is, from here onwards, from the expiry of 60th day, from the expiry of 60th day, this amount will be treated as deposit and not a deposit during the period of 75 days if you refund those monies within 15 days from the expiry of 60 days. Are you getting my point, students? So if you are making refund within due date, then it is not a deposit. Failed to refund within the due date, then it is treated as deposit. Tricky point, ma. This point was tested for 3 marks in previous attempts. The same point was tested for 3 marks. So come on, tell me, my dear students, share application money or securities application money, when it is not treated as deposit, when it is treated as deposit. Come on, tell me, when it is treated as deposit, when it is not treated as deposit. Sir, share application money up to 60 days from the date of receipt of application money, it is not a deposit provided company makes allotment. If company fails to make allotment, then company is required to refund within 15 days from the expiry of 60 days. Then also it is not treated as deposit. If company fails to return securities application money or share application money within 15 days from the expiry of 60th day, then it will be treated as deposit. Is it clear? So finally, it is a deposit when no allotment, company made no allotment plus no refund within 15 days. In that case, that amount is treated as deposit. Is it clear? Everyone? Next one. Amount received from directors. Amount or amounts received from directors. So for the purpose of this point, companies are classified into two types, two types: private company, public company. Private company can accept loans from directors as well as relatives of directors, or simply director relatives. Public company can accept loans from only directors. So here, relative of director is not considered. Now here the point is, if a private company is getting loans from directors or relatives of the directors, then that loan amount is not treated as deposit. If a public company is getting a loan from directors, then such loans are not considered as deposits, provided one more condition they need to satisfy. Sir, what is the condition, sir? Along with the loan, they need to sign a declaration. So the people giving loan to, oh my God, what happened? The people giving loan to the company, they should sign a declaration. The declaration is all about, money, loan money, money which we are giving to the company. It is purely out of savings, not out of borrowings, not out of borrowings. So like this, they need to sign, they need to make a declaration, and they need to submit this declaration to the company whenever they are giving loans to the company. So along with the loan, they need to submit a declaration. The declaration is all about, so the money which we lending to the company is purely out of savings, not out of borrowings. Are you all getting my points? Now the doubt is, sir, why for public company relative word is not there? Relative of directors word is not there. The reason is, private company can raise finance only from its members. Private company cannot accept your money from public. Yes or no? Private company can gather funds or can raise funds only from its members. So limited source is there. So that's the reason, along with the directors, one more person is also added. That one more person is relative to the director of the company. Relative to the director of the company. Understood? Coming to the public company, it can accept money from public. It can accept money from public. So unlimited source is there. So that's the reason relative word is not included here. Are you all getting my point, students? Everyone, now come on, tell me. Amounts received from the directors, when it is treated as not a deposit, when it is treated as a deposit. Come on, answer me. Sir, along with loan, if the person lending money, if he gives a declaration to the company, then it is not a deposit. Company failure to obtain that declaration, now it becomes a deposit. The important condition, along with the loan, company should receive a declaration from the lender. The declaration is, the money which we contribute or money which we are giving loan to the company is out of our own savings, not out of borrowings. Or else what happen, if this declaration is not there, what happen, since companies can accept deposits only from members, or since company accept deposits from directors, example I'm telling you. So company is having a limited source, right? So what these directors will do, directors will go to public. You can't invest money directly in the company. That's the reason you give us loans. You give me loan, I will invest money into the company. So like this, what directors will do, they will go to public, they will take money from public, and they will deposit money with the company. They will deposit all this money into the company. So simply director will act as an intermediary, and ultimately company is getting funds from public. Are you all getting my point? Actually, company is prohibited. Not all companies are permitted to accept deposits from public. Yes or no? Ineligible public companies are there, private companies are there. They're prohibited from accepting deposits from public. But this director, what they will do, they will act as an intermediary. This director will go to public, they will take money from public, and they will invest money into the company. Ultimately, the provision will be violated. They will violate the provisions. So this should not happen. That's the reason, director, you are giving loan to the company, right? Come on, give me the declaration. The declaration is, whatever money we are lending to the company is out of savings, out of net worth, not out of borrowings. You may ask me, sir, director, if he gives fake declaration, then what will be the consequence? Fraud. In case of fraud, 447 will come. 447 will come. Amount involved in the fraud, minimum amount involved in the fraud, maximum 3 times of the amount involved in the fraud. If public interest is affected, imprisonment minimum 3 years, maximum 10 years. Public interest not affected, sir, imprisonment minimum 6 months, maximum 10 years. Do you remember? Punishment for fraud, section 447. Okay, next one. So amounts received from directors, relatives of the directors of private company, I discussed with you. So when it is not treated as deposit, so if an amount is received from the director or relative of the director of a private company, or only directors from the public company, provided a declaration duly signed by the director or relative of the director is required. If these conditions are satisfied, not a deposit. Next one. So 8 points I completed. Next point. Hmm. Debentures. Debentures. Here, I'll discuss with you 9, 10, 11. 3 points I'll discuss with you. Debentures. So debentures, here I classify them into some three types. Secured debentures. Secured debentures. Not a deposit. Not a deposit. Convertible debentures. Convertible debentures. Convertible means what? At the time of maturity, company will not pay any cash. Company will issue equity shares. Equity shares. Company will take back debentures and company will settle that loan amount by issuing equity shares. Convertible debentures. Not a deposit. Not a deposit. Sir, unsecured. Non-convertible. But listed on recognized stock exchanges, sir. Listed debenture, sir. Listed debenture. In that case also, not a deposit. Not a deposit. So looking at this, I can make one conclusion. I can give you one conclusion. That conclusion is issuing unsecured, non-convertible, unlisted debentures, nothing but deposit. Secured debentures, not a deposit, first of all. Convertible debentures, not a deposit, first of all. Next one, unsecured, non-convertible, but listed on recognized stock exchanges, sir. Listed on recognized stock exchanges. Then also it is not treated as deposit. So finally, I can tell you like this. See, this point is not there in the bare act, not original act, or not there in our material. But based on this, you can come to the conclusion. That conclusion is unsecured, non-convertible, unlisted can be a deposit. Understood? So three types of debentures are not treated as deposits. What are they? Secured debentures. Convertible. I told you secured debentures under section 71. Secured means simply covering the value of debenture principal amount, not sufficient. The value of asset should covers both principal amount as well as interest on debenture amount also. Then only you can call it as secured debentures. Next, convertible debentures. Next one, listed debentures are not treated as deposits. Are not treated as deposits. Clear? Okay, sir. Next one. Amounts received from employee. Amount received from employee. Security deposit. Security deposit. Suppose Lalita Jewelers Private Limited company is there. Yeah, it is a private limited company. Lalita Jewelers Mart Private Limited or Lalita Mart Private Limited. I didn't remember the name of the company. Lalita Jewelers Private Limited company is there. And this company is looking for, cashier, a person for the post of cashier. And definitely, cashier post is very risky. Why? Because, he will handle lakhs of rupees daily. Suppose, company is selling jewelry every day 10 lakhs. Every day 10 lakhs. Now, this person will have a possession of the 10 lakhs, yes or no? So there is a chance, even if he's a good person, but money makes any good person as a bad person, if you segregate crimes, if you segregate crimes into two parts, the first reason of crime is money only. First reason of crime is money only. The main motto of committing criminal act is money. A second category, should not think bad. Second category is all about a girl. You watch any episode of CID, you watch any movie, because of these two things only, criminal activities are getting committed. Understood? Even if you take historical stories like Ramayana, Mahabharatam, so there also because of one lady only everything happened, yes or no? See, I'm not at all telling bad, but you can observe primary reason for criminal activity is money, 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 money. Primary. You watch any criminal movie, any movie for the time being, which is having a fraud content, definitely money is their main motto. Second one is all about lady. Understood? So money, it can convert a good person into bad person. Suppose a person who was appointed as a cashier, he is having some needs. So definitely for that money is required. So looking at the needs, cash needs. Obviously abscond with the cash. Now it will be lost to whom? Company only. Yes or no? Come on, my dear students, respond. It will be lost to whom? Companies only. So that's the reason, company, recruiting for recruitment of cashier. What company did It made a announcement like this. Yes, any person who wants to appoint as a cashier should make a security deposit. So deposit amount how much? 6 lakhs. 6 lakhs. Now, a person, even if he abscond with the cash amount of the company, definitely we can forfeit this deposit, and certain portion of risk we can avoid. We can minimize the risk. Yes or no? Now, company is accepting security deposits. Company accepting security deposits. This is also not treated as a deposit, provided two conditions company is required to satisfy. Condition number 1, max 12 months salary. Max 12 months salary. Condition number 2, non-interest bearing deposit. Non-interest bearing deposit. Non-interest bearing deposit means company should not pay any interest on the deposit. Company should not pay any interest on the deposit. If these two conditions are satisfied, then it is not treated as deposit. Accordingly, limit of 35%, conditions for accepting deposits, issue of circular, preparation of circular, these conditions are not applicable in this case. Are you all getting my point, students? Maximum how many months salary? 12 months. Suppose, for cashier post, we kept salary 50,000 rupees. Now 50,000 into 12 months, 6 lakhs. Yeah, no problem, sir. Sir, suppose salary is 60,000, sir. 60,000 into 12 months, 7 lakh 20,000. Security deposit is just 6 lakhs only. No problem, not a deposit. Sir, salary is 40,000, sir. 40,000 into 12 months, 4 lakh 80,000, whereas security deposit 6 lakhs. Now it is exceeding 12 months salary. So here it will be treated as deposit. It will be considered as a deposit. This point was tested in previous attempts. Understood. So amount received from employee is also not treated as security deposit, provided two conditions are satisfied: max 12 months, and second one, non-interest bearing deposit. Clear, everyone? So with this, almost 2/3 of exempted deposits I completed. So next one, received amount received, interest. So amounts received by the company held as a trustee, simply held as a trustee, that amount is also not considered as deposit. Only condition is it must be non-interest bearing deposit. Non-interest bearing deposit. This condition is satisfied, then amount received by the company held it as a trustee. Amount held by the company as a trustee, then also it is not treated as deposit. Clear? Next one, trade advances, ma. Trade advances, very important point, ma. Very important point. Chance of getting a question from this point is very high, very high. So just listen to me, listen to this point very carefully. So trade advances are not treated as deposit. Trade advances, amounts received by the company in the form of trade advances. So actually these amounts will also looks like a deposit, but this is not a deposit. Examples, nothing but points. First one, advance for supply of goods or services. Supply of goods or services. The only condition, this amount should be appropriated within 365 days of receipt. So appropriation must be done within 365 days. For example, you are taking Jio FiberNet services, ma. You want to take Jio connection. So immediately you need to pay 6 months internet charges or subscription charges immediately at the time of taking connection. At the time of taking subscription only, you need to pay 6 months advance. Are you getting my point? So today, if you want to take Geo FiberNet services, if you want to take Geo subscription, you need to pay 6 months internet charges in advance. Now, from company point of view, Geo Platforms Limited receiving advance from you for a period of 6 months, is it a deposit or not a deposit? The answer is not a deposit. The answer is not a deposit. Are you getting my point? Next one, I want to purchase a car. Simply, if it is for example, suppose if it is available in the showroom itself, I want to purchase a car with these features. I went to car showroom, I went to car company. If that car is available, definitely they will supply the car and I'll pay money immediately. So this will come under sale of goods or sale of services. Understood? So this is not a deposit. But the point is, they told us, sir, 2 months minimum 2 months before you need to pay amount, sir. So if you pay money first, we will order car and we will get that car, so we can deliver car to you. So now what I'm doing here, I'm making a deposit. For example, I'm making a deposit of 50,000 rupees. Car company is receiving 50,000 rupees money against the supply of car. Now, is it treated as deposit or not treated as deposit? Answer is not treated as deposit, provided appropriation should happen within 365 days. Appropriation should happen. That means, adjustment of that advance must be done within 365 days. Advance for supply of goods and services. Next one, advance for sale of immovable properties. Immovable properties. For example, real estate. A construction company is there, GMR Constructions, or some construction companies are there. Now, what these construction companies will do, generally construction companies, what they will do, first they will announce a venture. They will advertise that venture. Yes or no? Are you getting my point? Now the point is, they receive money from the customers in advance. After receiving amount, they will complete construction and they will sell these properties to the customers. Understood? So for a construction company, definitely, selling flats, it will come under sale of goods or sale of services only. Okay, fine. So that is the first point. Second point, suppose, a person is there, company want to sell the property. So it received 25% money in advance, 25% of sale consideration. It received this money in advance. What happened? Yeah, 25% of sale consideration it received in this year. Next year, they're planning for sale registration. So next year, for example, 30th March, they received this money. So after 3 months, that means, next year, 30th June, company will get remaining 75% money. After getting 75% money, company will transfer this immovable property to the buyer. Now, this 25% money which company received advance against the sale of immovable property is not treated as a deposit. It is not a deposit. It is not treated as a deposit. It is just a trade advance. Understood? Everyone? Next point. Security deposits for performance of contract. Example, rental deposits. Do you remember rental deposits? If you want to take any property on rental basis, the owner may ask you to pay 3 months in advance or 6 months in advance. Understood? Suppose, owner is the company engaged in renting of immovable properties. Against that service, company is asking you to pay a security deposit, advance money of 10 months rent. Now, company receiving that security deposit, it is also not treated as a deposit. It is just a trade advance. Next one, advance for long-term projects. A real estate example is the best example. Real estate. So I announced a venture, triple bedroom flats, 3 bedroom flats. So which I'll complete by the end of second year. So those who are interested, come on, pay me advance money. Once construction is completed, I will give you flats. Understood? So this is an example for first point as well as last point. The advances for long term project. Or suppose if you take infrastructure companies, you know, L&T, L&T is constructing metro in Telangana. Yeah, still some works are going on, man. Some works are still going on. So 10 years back, 12 years back, they started work. Majority work completed, but minor works are there. The point is, if any amount received for funding this long-term project, any advance they received for funding these long-term projects, these advances are also not treated as the deposits. They are just trade advances. And next point, advance as per authority. Advances with respect to statute or because of authority. For example, if you take NSDL, CDSL, if a company wants to convert their securities into demat form of securities, they need to file an application with the depository NSDL, CDSL, and they need to pay security deposit not less than 2 years annual fees. I told this point in section 29 of Companies Act. I told this point. Companies converting securities into demat form of securities, they need to file an application with the depository after completion of conversion. Before making an application, before conversion, at the time of filing application itself, company is required to deposit an amount with NSDL, CDSL. These are depositories. These are also companies. National Security Depository Limited, Central Depository Services Limited. These two are also companies. Now these two companies are receiving deposits because of a statute, because of authority. Now advances received by these entities are also not treated as deposits. It is just a trade advance for them. Next one, subscription of publication of subscriptions for publication of books, magazines, or newspapers. You all know, we'll deposit some money, we will deposit some money for subscribing some magazines for 2 years, 3 years, newspapers for 1 year, 2 years. Now company receiving these kind of advances, they are not treated as deposits. They are just trade advances. Understood? And there is one more point, that point is amounts received for extending warranty services. Advance for guarantee or warranty. In Big Billion Days, during Big Billion Days, Amazon announced Big Billion Days, right? So yes, I made some shopping, so once I selected the item, so when I proceed, when I am clicking on proceed to checkout, so there is a point for extended warranty, pay extra some 1,000 rupees or 2,000 rupees. Not only in Amazon, when you go to an automobile showroom, for purchasing vehicle or for purchasing a car, so they will give you options. Sir, we will give you extra extended warranty coupons, sir. If you hold these coupons, the warranty period will be extended to 4 years, 5 years, sir. That means during 4 years or 5 years, any damage to your item, so we will replace that item at free of cost. So extended warranty or extended guarantee facilities, definitely they will try to sell them also. Definitely they will try to sell them also. Now advances received against extended warranties, extended guarantees, now will they come under the definition of deposit? The answer is no. Now all these amounts are not treated as deposits. Even though they looks like deposits, they look like loans. Understood? 90% of exempted deposits we completed, only 10%. So next 5 to 10 minutes, just follow me carefully. After that, I'll give you break. So far we discussed, amounts received from governments, foreign, Indian governments. Next one, intercorporate loans, amount received through issue of securities, debentures, loans, employee security deposits. So all these points I covered with you. Just some 3-4 points are left over. Just follow me carefully. Amounts received from promoter. Amounts received from promoter. So what is the meaning of this point, meaning nothing. So loans, unsecured loans received from promoter is also not treated as deposit. Now, provided one more condition company is required to satisfy. See, company one time it filed application with the bank for the purpose of loan. For one loan, company filed an application with the bank. Banker agreed to give finance to company. Banker agreed to give loan, but on a condition. The condition is promoter contribution. There should be promoter contribution, a minimum 20% of project cost. Banker put this condition. The condition is, yes, for this project total, for example, 100 crores needed. So we are ready to finance you. We are ready to finance 80 crores, provided there should be contribution from promoters. How much? 20 crores. And this 20 crores must be, unsecured loan, not secured loan, unsecured loan. Now, amount received from promoter because of condition imposed by the banks. And if that amounts, if the amounts are unsecured loans, then that amount is also not treated as deposit. That amount is also not treated as deposit till company repay money to the banks completely. Last but one attempt, I think. This point was tested for 3 marks. This point was tested for 3 marks. Last but one attempt. Are you getting my point? So simply amounts received from promoter, not a deposit. No. Amount received from a promoter because of the reason, condition imposed by the banker. And the loan amount from the promoter should be unsecured. So till company repay amount to the banks, till company clears all its outstanding balances with respect to the loans from banks, until that point, promoter loan is not treated as deposit. Suppose company borrowed money from bank, on 1st January 2024. Same day, yes, company received amount from promoter also. Company received amount from promoter also. Understood? On 1st January 2024 itself. Now, company is paying loan amounts to the banks, So company cleared this loan amount, by 31st December 2029. So company made that loan amount zero. That means, for 24, 25, 26, 27, 28, 29. So 6 years. They took 6 years to repay complete amount. So for the period of these 6 years, that means, till this period, unsecured loan from promoter is not a deposit. And one more point, my dear students, from here onwards, once a bank loan becomes zero, from that point onwards, this unsecured loan will become deposit. So during this period, this unsecured loan will become deposit. That means repayment to the banks and repayment to promoters should happen at a time. So after clearing bank loans, any amount left with the company with respect to promoter unsecured loans, it will be treated as deposit. Are you all getting my point, students? Everyone. So this point, specifically this point was tested for 3 marks. This point is tested for 3 marks. Are you all getting my point? Okay. Next. Nidhi company. Amounts received by Nidhi company, not a deposit. Amounts received by chit fund company is also not treated as deposit. So amounts received by Nidhi company, amounts received by chit fund companies are not treated as deposits. Next one, amounts received under collective investment scheme, CIS, collective investment scheme. I discussed with you collective investment scheme under the definition of securities. The definition of security, I discussed with you units of collective investment scheme. Now this collective investment scheme collecting amount from its, from its investors, it is also not treated as deposit. Next one, startup company. Startup company getting funds from investors, getting money from investors. So this amount this amount. For example, against this amount, if startup company is issuing equity shares, it will come under equity share capital. If company issue preference shares, it will come under preference share capital. Suppose company is not issuing equity share capital. Company is not issuing equity shares. Company is not issuing preference shares. Company is not issuing debentures. Suppose they are giving a convertible note. For example, it is giving convertible note. It is not an equity share, preference share, debenture. So this note, in future, investor can convert into equity. Investor can convert into equity. And, investor paying this amount, investor depositing amount not less than 25 lakhs. Not less than 25 lakhs. Then also it is not treated as deposit. Amount received by the startup company, exceeding 25 lakh rupees under a single transaction. In a single transaction, if startup company is receiving 25 lakhs or more and company is issuing a convertible notes, then also it will not come under the definition of deposit. Everyone getting my point? So startup companies up to 10 years, amount received by issuing convertible notes is not treated as deposits. And last point, amounts received from a real estate investment trust, alternate investment schemes, mutual funds, venture capital funds, all these are also not treated as deposits. Amounts received from real estate investment trust, alternate investment schemes, mutual funds, venture capital funds. Each and every fund is having one criteria. Mutual funds, if you look at mutual funds, they receive money from public and they will invest money in the shares of the company. So mutual fund companies, whatever profit they get from that investment, they will distribute this profit among the members of mutual fund company or among the depositors of mutual fund company. Now the point is, these companies depositing some amount with company. A real estate investment trust will deposit in, a company which is engaged in real estate projects. Once this real estate company receives the funds, they will construct apartments, residential villas or commercial complexes. Yes or no? So once construction is completed, once sold, so real estate companies will get profits, and real estate companies will pay certain portion of profits to real estate investment trust. Are you getting my point? Venture capital funds, they will make investment in startups. They will invest money in startup companies. See, against these investments, if companies issuing equity shares or preference shares or debentures, then they will not come under the definition of deposits. No problem. Suppose company is not giving any equity share, company is not giving any preference share, just company is receiving a loan. Now such loans are also not treated as deposits. Such loans are also not treated as deposits. Are you all getting my point, students? Last 1 hour, I think 50 minutes, I discussed with you exempted categories only. Exempted categories only. Just we'll read these exempted categories in the material and then we'll take a break. So following categories of amounts are not considered as deposits. Any amount received from government, the central government or a state government, or from any other source whose repayment is guaranteed by the central government or a state government, or amount received from a local authority, amount received from a statutory authority constituted under the act of parliament or state legislature, not a deposit. Amount received from foreign governments, foreign or international banks, multilateral financial institutions, foreign governments, foreign export credit agencies, foreign collaborators, foreign body corporate, foreign citizens, foreign authorities, persons resident outside India, simply foreigners, foreigners, not a deposit, subject to FEMA rules and regulations. Next one, loan from banks. Any amount received as a loan or facility from banking companies, SBI, cooperative banks, notified banking institution, not a deposit. Amounts received from public financial institutions, insurance companies, scheduled banks, not a deposit. Amounts received against issue of commercial paper. Commercial paper is nothing but short-term promissory notes. Short-term promissory notes. Commercial paper is already excluded from the definition of debenture. So many think that commercial paper comes under deposit, but it was clearly notified that commercial papers, amounts received against issue of commercial papers, not treated as deposit. Next one, intercompany loans, not a deposit. Share application money, shares meant for allotment, security application money, I told you, right? So within 60 days, allotted within 60 days, not an deposit. So excess application money or unallotted application money treated as deposit when if the securities for which application money was received cannot be allotted within 60 days from the date of receipt of application money, such application money or advance is not refunded to the subscribers within 15 days from the date of completion of 60 days. Such amount shall be treated as deposit under these rules. And we have to pay interest at the rate of 12% per annum. Same point is there in section 42. Check there. And I already told you, I'm open challenge. How much? 1000 rupee. Suppose 10 students found this mistake. For example, sir, under section 42, you didn't discuss that point, sir. If 10 students point out, I'll pay 1000 each to each and every student who pointed out. Suppose 1000 students pointed out. I'll pay 1000 rupees to each and every student. Open challenge. And then loan from directors, loan from relatives of the directors in case of private company. Any amount received from a person who at the time of receipt of a money was a director of the company or relative of a director of the private company. For public company, relative word is not there. So further, director is required to furnish to the company at the time of giving the money a declaration in writing to the effect that amount is not being given out of funds acquired by him by borrowing or accepting loans or by borrowing or accepting deposits from others, and the company shall disclose the details of money so accepted in the board report. If all these conditions are satisfied, then not a deposit. Next one, bonds and debentures. Secured debentures, secured bonds, not a deposit. Not a deposit. Any amount raised by issue of bonds or debentures secured by a first charge or charge ranking pari passu. That means, not first charge, sir, subsequent charge. However, first charge holder, subsequent charge holders will have same rights, sir. Same rights. This first charge ranking pari passu, very detailed, I'll discuss with you in section number 77. Don't worry. I'll discuss with you what is the meaning of charge, first charge, subsequent charge, charge ranking pari passu. I'll discuss with you in the next topic. But for the time being, first charge means for the first time creating charge on a asset against one loan. Loan of 50 lakh rupees. We are creating this property. We are creating charge on this property, and we are giving charge we are giving a property in favor of first borrower. Actually, this property value is, imagine, this property value is 2 crores. We know we need some more funds, and we went to second borrower. Not borrower, lender. Mistake. I'm sorry, lender. So first time we went to one lender, he gave us 50 lakh rupee and we provided this property as a security. The value of property is 2 crores. For 50 lakhs loan amount, we provided this property as security, rupees 2 crores property. After 6 months, again I need funds. I went to second lender. This time only 25 lakh rupees. Loan how much, ma? 25 lakh rupees. And with the consent of a first lender, you can provide same property as security to the second lender. With the consent of a first lender, you can provide same property as a security to the second lender also. So second time you are creating charge on the property. Already it's a charged property. Again you are creating a charge. We call it as second charge or subsequent charge. Now if the charge is created with the consent of first lender, so these two lenders will carry same rights. That means once property is sold, these two lenders will get right over that sale proceeds of the property. So charge ranking pari passu. Second lender will also get same rights like first lender. Charge ranking pari passu. Very detailed, I'll discuss with you in section 77. With the first charge on any assets referred to in schedule 3 financial statements, excluding intangible assets, intellectual property rights. Example, intangible assets. So charge shall be created only on tangible assets for this purpose. Next one, convertible debentures. Bonds or debentures compulsorily convertible into shares of the company within 10 years. Then also not a deposit. However, if such bonds or debentures are secured by charge of any assets are referred to in schedule 3, excluding intangible assets, the amount of such bonds or debentures shall not exceed the market value of assets as assessed by registered value. I told you previously also, principal as well as interest amount. Principal amount of debenture, interest of debenture amount, these two amounts should be covered by value of the property. So value of property cover not only principal but also interest. Then it is not treated as deposit. Non-convertible securities, however, listed on a recognized stock exchange, then also not a deposit. Clear? Next one, security deposit from employees. Any amount received from an employee of the company not exceeding his annual salary under a contract of employment with the company in the nature of non-interest bearing security deposit. Non-interest bearing security deposit, maximum 12 months salary. Company is permitted to accept that amount, and that amount is not treated as deposit. Once again, I'm telling you, company can accept a 2-year salary, company can accept a 3-year salary, but up to 1-year salary, if it is accepting deposits up to 1-year salary, it is not treated as deposit. Any amount in excess, then complete amount is treated as deposit. So company can take security deposit from its employees, but that security deposit shall not exceed 12 months salary, and the deposit must be non-interest bearing security deposit. Everyone getting my point? Example, 2,50,000 received from Mr. Raghu, an employee of company who is drawing annual salary of 2 lakhs. Annual salary 2 lakhs. The company is taking 2,50,000 rupees from Raghu. Is in the nature of a non-interest bearing security deposit. This amount received by company from employee Mr. Raghu will be considered as deposit. Why? As amount received is more than annual salary under a contract of employment with the company in nature of non-interest bearing security deposit. Next example, 6 lakhs is the annual salary, but company received 6,50,000 rupees. Again, this is also treated as deposit only. It will also be considered as deposit only. Understood? If a security deposit is less than or equal to 6 lakhs, then it would not have been considered as deposit. Next one, any non-interest bearing amount received or held in a trust, not a deposit. Advances received for commercial transactions. That's what I told you, trade advances. An advance for supply of goods, provision of services accounted for in any manner whatsoever, provided that such advance is appropriated against supply or provision within a period of 365 days from the date of acceptance of such advance. However, this limit of 365 days is not applicable in case where that advance subject to matter of any legal proceedings before any court of law. Suppose I paid advance for one product. Company is there to supply that product. Meanwhile, legal proceedings were initiated against company. Now, right now, company, it stopped manufacturing, it stopped everything, it stopped its business operations. Now 365 days completed, sir. So can I treat that advance as a deposit? No. Until legal proceedings are going on, it is not treated as deposit. So the time limit of 365 days is not applicable in this case. Next, advance for immovable property. An advance received in connection with consideration for an immovable property under an agreement or arrangement, provided that such advance is adjusted against such property in accordance with the terms of agreement or arrangement. Perfect example, real estate companies only, ma. Real estate companies, of course, it comes under goods. First of all, immovable property is excluded from the definition of goods. Immovable property is excluded from the definition of goods. Then you told, sir, it comes under first point. No. See, ma, under GST, you will get a clear-cut clarity with respect to immovable property. Generally, GST is not leviable on immovable property. However, during construction, before completion of the project, if a company receive advance from the customer, then company is liable to pay GST. Builder is liable to pay GST on it. It's like provision of service. What GST Act is presuming? GST Act is presuming it as sale of services. Construction is obviously service, no? Empty land. Now I'm providing service. I'm providing construction service. Because of the service, a building comes into the picture. A residential villa is coming into the picture. So the point, before completion of construction, advance amount received, it's against to the, it's like a provision for service. Already construction completed, sir. Now I received advance for sale of immovable property. B point. B point. No confusion at all. Next, security deposit for goods or services. Security deposit for the performance of contract for supply of goods and provision of services. Advances for long-term projects, L&T Metro. Advance for AMC contracts. I told you, extended warranty coupons, extended guarantee period, right? So does not exceed the period prevalent as per common business practice of 5 years. Sorry, as per common business practice or 5 years from the date of acceptance of such a service, whichever is less. Maximum you can accept advances for AMC contracts for this period. General period or 5 years, whichever is less. Generally, for how much period we can provide AMC service, warranty period, or 5 years, whichever is less. Up to that amount, up to that time limit. If you are receiving any advances, then it is not treated as deposit. Sectorial permitted advances, not a deposit. Advances for subscriptions, newspapers, magazines are also not treated as deposits. However, it is clarified that amount received under items, A, B and D above. A, B, goods, immovable property, long-term projects. Above, if they becomes refundable due to reasons that company accepting money doesn't have necessary permission or approval, whatever required to deal in the goods or properties or services for which money is taken, then amount received shall be deemed to be a deposit under these rules. However, if you are refunding all those amounts within 15 days from the date they become due for refund, then it is not classified as deposit. Understood? Suppose we are engaged in for example sake telecom services. Example, telecom services. So we are providing telecom services. Against that service we received advance, and suddenly we received a notice from government, stop providing services. We got an important information about you, important data about you, that you got a telecom license simply by paying bribes to the department, and you are violating the provisions of telecom regulatory authority rules and regulations. ROI regulations you are violating. Like that, we received a complaint against you. Now stop providing the services. Once I stop providing services to my customers, I need to refund all the advances. So if I refund all those advances within 15 days, then not a deposit. Fail to refund within 15 days, it becomes deposit. Next one, loan from promoters. Conditions. Just look at the condition. Loan is brought because of the stipulation imposed by lending institutions on the promoters to contribute such finance. The loan is provided by the promoters themselves or by the relatives or by both, and such exemption will be available. Such exemption shall be available till the loans of financial institution or banks are repaid, and not thereafter. This is the important word, not thereafter. 5 years back you get loan from the bank. 5 years back you get loan from promoters. You get loan from promoters. Now you are repaying complete amount to the banker. At the same time, you need to return funds to the promoter. Sir, I'll pay amounts to the promoters after 1 year, sir. Acha. For this 1 year, that amount will be covered under the definition of deposit. So after repayment of loan, it may be treated as deposit. Further, if the promoter is a director, it will not be treated as deposit. Why? Of course, this point will not apply, but the above point, loans received from the directors, not a deposit, right? Right? If you look at Reliance Industry Limited, Mr. Mukesh Dhirubhai Ambani, he is a promoter as well as he is a director. He lent money to the company in the capacity of promoter for the purpose of getting loan from a financial institution. Company repaid amounts to the financial institution, and company didn't pay amount to Mukesh Dhirubhai Ambani. Now, will it be treated as a deposit? No. Why? Okay, in a promoter capacity, company received loan, but right now he is in the capacity of director also, right? So loans received from director, not a deposit. Like that, we can exclude it from the word deposit. Now, amounts received by Nidhi company, not a deposit. Amount received by chit fund companies, not a deposit. Amounts received by company under collective investment scheme, not a deposit. Startup companies, 25 lakhs or more. Remember the word 25 lakhs or more by way of convertible note, convertible into equity shares, are repayable within period not exceeding 5 years. Right now, this 5 years, the time period is increased to 10 years. It's not 5, 10. In a single tranche. Tranche is nothing but portion of something. So under a single tranche, if company is receiving 25 lakh rupees or more by way of convertible notes, then also it is not treated as deposit. Understood? Everyone. Next next one, REIT, IFIT. Any amount received by a company from alternate investment funds, domestic venture capital funds, infrastructure investment trust, real estate investment trust, and mutual funds registered with the SEBI in accordance with regulations made by it. They are also not treated as deposits. Is it clear? Everyone. Each and every point I explained in detail, ma. No, that's it, ma. Almost 60% of chapter completed. Remaining all very, very simple norms, very, very simple conditions, very, very simple provisions. Already I discussed with you general conditions for acceptance of deposits. Yes or no? So that points, I'm going to explain you in question number 5, question number 6, question number 7. So if you look at question number 5, already discussed with you. Question number 5 already discussed with you. Clear? So why I discussed these conditions? The reason, these conditions, these limits, this tenure is not applicable with respect to these deposits. Any other amount which is not covered in these 18 categories, now it is perfect to deposit. For that to deposit, chapter 5 acceptance of deposit rules shall apply. Clear? Okay, with this I'll give you a small break. So after having a small break, you can watch next lecture, ma. Are you able to follow me? Okay, fine. So we'll meet in next class.